focus in on Dabur. Those earnings came in a while back. Slight uptick as far as the bottom line is concerned. Sales have largely been steady for Dabur. On individual print of those Dabur numbers, you have domestic business volume growth coming in at 4.5%. Raw material costs are just about flat on a quarter-on-quarter basis at around 40 to 41%. Margins also stable at 20.3% versus 20.4%. Let's connect with the management. Joining us on the show, Lalit Malik, the CFO at Dabur India. Afternoon, Lalit. Thank you for speaking to us at BTVi. Just give us some more print on the quarter gone by. What's been the underlying reason for this performance?
Sure. I think as far as our quarter 2 is concerned, our consolidated basis, the top line growth is around 1% and the PAT is around 5%. We have maintained the operating margins and EBITDA has improved. So it's, I would say overall, there has been pressure on the top line as we see on quarter 2, primarily on account of international markets where we have seen adverse impact of geopolitical developments in countries like Saudi and Iraq and Turkey. We have also seen the exchange impact, which is a steep devaluation in countries like Egypt, in Turkey and in Nigeria. So that have contributed on the top line. And consequently, the profit has also got an impact of that. But the ratios with regard to operating margins and have been maintained and EBITDA has been improved.
Right. Will the second half be better than the first half for you? What's the kind of performance that we can expect from a Dabur going forward?
Sure. I think as far as H2 is concerned, second half will be better than quarter 1 than first half. We do expect the top line to grow on account of good monsoon and the fiscal incentive on 7th pay commission and the overall positive sentiments. We do expect H2 to be better than H1, but we do not expect it to be a substantial jump. It would be a steady growth, though there will be some pressure on the margins.
As far as volume growth goes, we've seen it at about 4.5% for the domestic business. What's the outlook on the same going forward?
Right. So as far as the volume is concerned, we have seen 4.5% growth. Quarter 1 was around 4.1%. So we are within the trajectory of around 4 to 5%. Going forward, we do expect the volume to grow. It's very difficult to say what the annual number will be, but we certainly see that H2 will be better, especially also on the back of the promotional spend that will increase. So we do expect the volumes to be better than first half.
And final question before we let you go, what's the strategy on your international business? In the past, you've had some problems, especially with the juice business. Is that over for now? What can we expect?
Sure. As far as juice is concerned, we had seen the stoppage in the last year from quarter 3 onwards, whereby the supply from Nepal was stopped, and we have enhanced our production in Sri Lanka and also in the local manufacturing in India. And as a result of that, currently we do not have any such restriction. In fact, in quarter 2, our juices have actually improved and increased by almost 15+% compared to last year. So I think as far as juice is concerned, we are back on track. We have gained the market share, what we had lost last year on account of supply issues. So juice, we don't see any constraint as of now. And we have also enhanced our manufacturing base in India as well as in Sri Lanka. So as a result of it, we think that we have de-risked the supply issues even going forward.
Right. We'll leave it at that. Thank you for speaking to us, Mr. Lalit Malik, the CFO at Dabur India, on those earnings. The stock has seen a good reaction, buzzing in trade, seeing gains of about 3.5% right now, sitting near the highest point of the day. Mohit, a chart check on a Dabur stock.
Well, Dabur's seen a good base formation around levels of 270 to 285. Today we've seen a nice breakout in the charts on the upside on good volumes. This can head higher towards levels of 310 in the coming few sessions. So this is a buy with a stop loss at levels of 290 for targets of a 310.
Right. Let's take a short break at this point.